Is buy and hold investing the best way to invest? That's a question more and more investors are wondering as times are changing and things are available to individual investors that were never available to us before. In this video, I want to talk about the things that could be considered to decide if buy and hold investing is the best strategy for you. And also at the end, I'm going to share 3 epiphanies that I've had specifically in relation to buy and hold investing over the 40 years that I've been investing. The very first factor I want to share with you as it relates to whether buy and hold investing is the best strategy for you is the time frame for which you're investing. Now, this is very in alignment with traditional investing, which not all of my work is, but you've probably heard it before. The time frame determines the strategy that you should use. If you're a young investor and you're going to invest for 30 years, then you're able to ride out the bear markets, the occasional bear markets that happen, the ups and downs of the market, and the goal becomes an overall return that you're wishing to accomplish without any worries about the cycles of the financial markets and or the economy. And most investors that are buy and hold investors own both stocks and bonds in their portfolios, and the idea is that when stocks go down, bonds will go up. They have been shown to be non-correlated over certain time frames, although they're not always non-correlated. So make sure you check out my video where I show the data on this. So I bring this up because the time frame that someone is investing is a huge factor in determining whether or not buy and hold is investing the best strategy. And most people that invest for 30 years and are buy and hold investors are following that sort of asset allocation model with stocks and bonds over a long period of time because they're thought to be non-correlated. Okay, so someone that is, say, investing for 3 years, maybe they have a 3-year time frame for money that they want to save for something in particular special, or maybe before they're going to retire. Someone in this case may want to consider something other than buy and hold investing, but the real factor here is based on what's happening in the economy. For example, if stocks happen to be way overvalued and or perhaps bonds have been in a long-term upward cycle and interest rates have been in a long-term downward cycle, then it may be more likely that this particular investor may want to not be a buy and hold investor for that full 3-year time frame, simply because overvalued stocks are riskier than undervalued stocks. It just doesn't feel that way because everybody's making money when stocks are overvalued as they ride up that elation, that elated ride up to the top as stocks become more and more overvalued. And granted, a lot of money is made near the tops of those markets, there's no doubt. But eventually stocks do fall, and they've got to fall because they revert back to that average, that mean. And we know that's how the math works. And so it could take more than 3 years for those excesses in the market to work themselves out. And in that case, someone with a 3-year time frame, maybe 5-year time frame, if we look at the 2000 decade, maybe a 10-year time frame where the returns were negative for that entire period. We've even had longer time frames where stocks weren't productive for decades. So the time frame, as well as the economic cycle and or conditions in the financial markets factored in as well, can be a heavily determining factor whether or not buy and hold investing is the best strategy for an investor. Okay, the next factor I want to mention, but before I mention that, let me say if you like this information, please subscribe to my channel. If you like this video in particular, I'd love it if you click that little thumbs up below the video and ring that little bell if you subscribe so you know when I post a new video. I think it shows up in your feed. And I'd love it if you'd just do that, and it really supports my channel and helps me with YouTube. So the next factor that I want to mention in determining if a buy and hold investing strategy is the best strategy for you, and that's taxes. If you're in a really high tax bracket already, or you have concerns about investing a lot of money, buying and selling, generating capital gains that will trigger higher taxes, especially those short-term capital gains, which is what happens with successful investors that are doing something other than that buy and hold. They're being more active, they're buying and selling assets more often. Then that may be a factor to consider for you in sticking with a buy and hold investing strategy, simply because you don't have taxable situations that trigger higher taxes. I sort of feel like that's putting the what's the saying, the horse before the cart, because I think higher returns are more important. But if after taxes we don't end up getting higher returns, then they're not more important. So I think everything is worth consideration when it comes to our taxes. And I've done some other videos on that you can check out. Okay, the very next thing I want to mention as a factor in deciding if buy and hold investing is the best strategy for you is your level of wealth. A lot of investors, believe it or not, decide that they've gotten enough money. Buy and hold investing is just, it's more work. That's all there is to it. Plus it triggers, like I was saying earlier, it triggers tax situations. So many investors who've already achieved financial independence, who aren't concerned about growing, building their wealth more, are happy with the returns that they feel like they'll get from buy and hold investing, may decide it's just not worth it to go to the hassle of doing more active investing, of doing something other than buy and hold investing. And then the next factor to consider in making a decision whether buy and hold investing is the best strategy for you is whether or not you want to make the effort. Okay, so making the effort involves not just doing what it is you decide that you're going to do that's more active than buy and hold investing, but it also involves learning what you're going to do. So the learning can take a little while, and the implementation can take a while. Now, having said that, there are a lot of strategies you can do other than buy and hold investing. They're all sort of active investing. They fall under that category, but there are a lot of different methodologies or strategies underneath that active investing category. So, for example, someone may choose to analyze stocks and then buy those stocks based on them going up over a fairly short term or based on a certain valuation. And once they exceed that valuation and no longer are good values, they may choose to sell them, or they may choose to buy asset classes such as stocks, bonds, gold, real estate, only during a certain time frame based on valuations. Other investors, however, may choose to follow some sort of system. Nowadays, fortunately, investors have access to tools and systems that have been developed that were once only available to financial advisors in the financial services industry and ultra high net worth investors. This is what I do. I follow a system, and I've taught some of my clients this same system. It's easy to follow it after learning it, which only takes 2 or 3, maybe 4 or 5 hours, depending on the expertise of the investor coming into it. It really only takes an hour or so for me to implement a month. So I love this. I feel like I have the best of both worlds. Now, I'm also a buy and hold investor, which is one of my epiphanies I'll get to in just a second. But having said that, it's important to realize that doing something other than buy and hold investing is no longer a huge time drain on us. We can take advantage of what's available to us as individual investors. The next factor to consider really relates to someone who wants to work with a financial advisor, as many individual investors do now, and that is that if they want to do something other than buy and hold investing, it could be hard to find a financial advisor or a wealth manager that does this for them. One option might be to use a more active fund. But having said that, more active mutual funds have shown consistently to the majority of them not beat the returns of those passive funds, those buy and hold funds, particularly those index funds that have been purchased, the buy and hold funds versus those more active ones. So having said that, that might be a consideration for you if you want to work with a financial advisor, because most of them are buy and hold investing. They use that strategy. They prefer that approach over something more active. Now I want to share with you the 3 epiphanies that I've had investing for several decades in relation to all of this. I've done buy and hold investing, and I still do some. And I've also done more active investing. I've even done trading. I didn't like trading, but that's not the topic of this video. The topic of this video is whether a buy and hold investing strategy is best for you. Okay, so the first thing I want to share is that I am, like most of us investors, already a buy and hold investor for a large portion of my net worth, our net worth. And the reason I say this is because most of us own homes, and the older we get, the more equity we have in our homes. And by the time you're over 50, or certainly by the time you reach retirement, a huge chunk of money, if not maybe your home may be completely paid for, is in your home. So homes fluctuate in value based on what's happening with the economy, often and usually in relation to recessions and economic growth and economic contraction. And normally, even though the timing is off a bit and they're a little different, it's related to or tied into what's happening in the stock market and or the bond market. So I feel like we already have a lot of our net worth tied up in a buy and hold strategy, and that is our home, and that is also our rental properties, because we tend to hold those. We have held these particular properties a long time. So think about that. Think about your net worth as a whole. This is what I tell my clients to do, and I have in my programs as well. It's about our net worth as a whole. It's not just about stocks isolated. It's about our net worth. And if we think about our net worth, are we not already buy and hold investors if we have a lot of our capital tied up in our home? So that's epiphany number 1 that I really realized. The next epiphany is that most investors feel like they will miss out. They experience FOMO if they are not buy and hold investors due to many studies that have been published by the financial services industry showing that if you miss these 20 days in the market, or however many number of days, that your investment returns will severely suffer. You'll never recover. Well, yes, these studies warrant attention. I love data. I base my investing decisions on data, on math. It doesn't lie. So I like the data. But the big aha is the time frame that the study was done, during which the study was done, determines the results. And the time frame during which I'm going to be investing will be different from the time frame during the study period, and the economic conditions in the financial markets during that time frame or what determine the investment returns. So I've kind of let go of that FOMO. I used to be really caught up in that study. That I can't miss those up days in the market. But after this epiphany, or those, I may have thrown in 2 or 3 epiphanies there, I'm a little bit different in how I approach this. So I no longer use that as a reason for buy and hold investing. That's not to say that I don't, because I do have my home. But for core portfolio, now I prefer a more active approach. And then the third epiphany is that there is no cookie cutter formula. Okay, so is a buy and hold investing strategy best? It depends on you. It depends on the 5 factors I already mentioned. It depends on what your goals are. It depends on your net worth. It depends on your time frame, all those factors I've already mentioned. It depends on how much energy you want to put into this. It depends on how much effort you want to put in this. Because this is about wealth. This is about your money. And wealth is about being happy and enjoying life as much as it's about your money. So there's no cookie cutter, that's hard to say, cookie cutter formula that's going to work for every single investor. That's really, really important to remember. And only you can decide what's best for you, but you can't do that until you are in a place of knowledge and confidence about the many options and ways you can invest so that you can make the best decision for you. Remember, retire certain.